The saying, "keep it simple, stupid," isn't an insult. It's a design principle attributed to a legendary aircraft engineer working for Lockheed Skunk Works in about 1960. According to the story, Kelly Johnson handed a team of design engineers a handful of tools. He challenged them to design a jet aircraft that an average mechanic could repair under combat conditions with only the tools he'd given them. I was first introduced to the KISS principle by an accounting instructor in college. And for the longest time, I thought it was one of the fundamental accounting principles. Over many years of going to school, learning, which aren't the same thing, and working, I've learned that keeping it simple just makes sense. Just this morning, I was on a video conference with a chartered accountant from India and our shared client. One of the issues was the complexity of Canada's goods and services tax regime. It wasn't supposed to be that way. I was around when the Conservative government of the day introduced the GST in 1991 as a replacement for the much older federal sales tax that was charged by manufacturers to their customers. It made sense to remove the federal sales tax, which was an impediment to our goods-producing sector, which has been shrinking as a percentage of our gross domestic product for decades. The way it was described, it should have been simple. You could simply have calculated the GST paid as a percentage of the total purchase price and calculated the GST charged as a percentage of the sales price. Then paid, or received back, the difference. You wouldn't even need the receipt to calculate the tax. But it never worked like that. None of the provincial or territorial governments could leave well enough alone. In fact, only 5 of Canada's 13 jurisdictions are participating provinces. These provinces replaced their existing provincial sales taxes with harmonised sales tax, each at their own rate. The remaining 8 jurisdictions have kept their pre-existing provincial or territorial sales taxes. In a small country like Canada, with a population of just over 40 million, we now have 13 different combinations of provincial and territorial sales tax in addition to the GST, which is applied at different rates in different provinces. Predictably, the province of Quebec, which has always considered itself to be special, has replaced the GST with the QST, further complicating compliance when companies sell to customers in different parts of the country. I've heard at least one observer referring to Quebec's complication of tax and tax administration in this way. The province of Quebec has never met a tax, or tax credit, they didn't like. All of our provinces are guilty of vastly increasing the complexity of our tax regimes in order to appear to be meeting the particular needs of their electorate. This needlessly poses a huge compliance cost on our smallest businesses, and it needs to stop. While Alberta, to its credit, has avoided implementing a provincial sales tax, it's worth noting that Alberta requires corporations resident there to submit a second Alberta corporate tax return to that province's own separate income tax assessing department. We'd argue this imposes an unnecessary complication and for no good reason. Perhaps the provinces want their share of Canada's increasing numbers of public sector jobs. Quebec, for its part, not only complicates sales taxes, but have their own income tax administration as well. As of October 2024, the population of India is estimated to be 1.45 billion people. In spite of their immense population, they managed to consolidate their version of a value-added tax, or VAT, across the entire country, with a single rate and bureaucracy. Canada's overactive bureaucracies should take note.